Good morning, everybody. Welcome to another day. Market Report brought to you by Mike Bjork. Today is Thursday, September 8th. We got actually just one economic news release scheduled for today. These next 2 days are kind of light, as I mentioned, this whole week for the most part, with exception of maybe 2 or 3 economic data is important this week. But today we got the weekly jobless claims. So last week we had 263 people apply for unemployment. Forecast came in at 265,000, and the actual number came in at 259,000. So good numbers. It looks like it's coming down a little bit more, and we've been kind of seeing a little bit better jobs numbers and such. So let's go ahead and take a look here. Stock market's down. A lot of it comes to ECB made their announcement today and basically said there's no change in policies into their QE nor any rate changes. So of course European stocks are kind of disappointed that they're not doing more stimulus. And of course, a little bit of that's trickling over to here because they're still concerned about possibility with all the hawkish tones from Fed presidents or governors out there that perhaps maybe there could be a rate hike as early as September. So for the most part, you're seeing a lot of investors pulling money out, trying to decide which way they're going to go. And today is no exception. So yesterday we went up above here. We kind of closed in that basically didn't. At zero policy. I mean, we went close up about 3 basis points from where we left off on Monday, or Tuesday rather. Yeah, Tuesday. Today we start off lower, which is kind of a concern because after having a nice little rally, now we're starting off a little bit lower, and now we're down about 16 basis points, which would lead to worse pricing today compared to where we were yesterday. So pricing worsened a little bit. Now we could potentially see more of a sideways pattern until they decide where they're going to go. We could see this pattern here, especially with the 10-day and the 25-day moving average up, and we got the resistance here, and this could tighten up, and it could force us over term to maybe go up or lower, depending on which way the investors feel like they're going to go. But we could technically, potentially go up, because again, the investors are concerned about raising rates, and that's actually good for bonds. So typically, that would be if there's any hint of rate hikes, it usually helps out the bond market, which in turn would help out interest rates. All right, so rates are a little bit worse today. We got to stay. I would be very cautious here, as again it opened up lower than where we left off yesterday, or even where we started yesterday. So we got to make sure that this isn't a trend reversal here. All right, have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye bye.